right, Bismillah. Anyway, I didn't do my playbook for Monday. Tweaking already. I didn't do my playbook for Friday price action. So I'm gonna do it now. Today is Sunday, February 4th. Time now is 1:28 p.m. Eastern Standard Time. And let's go. So Friday there was 8:30 and 10 a.m. High impact news, non-farm payroll, and we already know FOMC non-farm payroll. It's like increased volatility, increased like manipulation of the markets. So, gotta keep your wits about you, right? So let's get into it. As usual, I don't intend to spend too much time here, but such is life. I'm gonna start off with the 4 hour as a higher time frame because that's the time frame I prefer. Generally on the weekends, which I still have to do that. On the weekends, or before the week starts, I kind of go from the weekly to the daily to the 4 hour. But we already have our levels from the week. There's a couple other things I want to kind of look into as well, which is like the power of three in regards to the January month, as well as the weekly profile, to kind of look into that. So I think I'm not too sure we get into that right now, but I'm going to get into it a little later, either way. So, these recordings actually help me. Otherwise, I probably wouldn't be as rigid or as disciplined as I am if I didn't record them. So that's why I kind of record these with bloopers and all the mistakes and everything else, because this is for me primarily and for whoever else will benefit after I come first, right? No offense, right? I care, but I'm practicing self-care with these playbooks, right? So we can actually delete this and this and this. Anyway, so these are relatively equal highs. So this is technically still in play, right? Even though it's taken out here, it's technically still in play. So this is now rated. And this is DXY. And we can see here. Okay, have that taken out. Sell side was rated here, relative equal lows. Came back up, took out this buy side. Came back down, took out sell side here. So sell side is rated here, as well as see that happens. Then you kind of treat wicks like gaps as well. So you can also 102, 912. Just drag that out. And that's the halfway point on this wick here, and you see price kind of trading into that. Do we see anything back here? Not necessarily, right? All right, so what time was the news? 8:30 and 10. 8:30 and 10. All right, so you drop down. Let's put this back on. Just take that out. Take these days of the week off, because why not? That's for a different practice. All right, so we can see here on this time frame, we can see the previous day's high is here, previous day's low is here, and we're using the midnight open. And this will be that consequent encroachment of that wick, right? Of the 4 hour Okay, so took out previous day's low and reclaimed this 4-hour fair value gap. But so this happened on the 8 o'clock candle. Let's drop down. Let's see, 30 minutes. Big bull, right? Big bull, right? So anyways, with that 15-minute, you have a setup here. You can see you squint your eyes, right? Don't really have to squint your eyes, but anyway, you can kind of see using the previous day's low. You see 1, 2, 3 reversal pattern. There's no, technically this is a break in market structure. You can risk that, and this would be your bearish fair value gap turned inverted fair value gap here for a setup, for a inverted fair value gap setup. Let's use, I don't like necessarily highlighting everything because the chart gets kind of crowded. So let's just make that a little thicker so we can see it, and we can see that price. Let's make that like black or something, and let's just pull this back. All right, so we have our entry here, and it's the bodies of the candle stayed above the midpoint, the consequent encroachment of this bearish fair value gap turned inverted fair value gap here, and that's what it is. And as usual, I like to look for optimal trade entry. And one thing that I'm working on currently is not, sometimes I neglect the higher time frame analysis, so to speak, right? So this is why, like, if you're on this time frame, you may say, all right, this is still bearish. Why would I want to look to go long here, right? And you have these types of aspects here where you're going to risk the low of day, and you have these targets here, right? Just kind of touch on that, but you can also see that price is moving pretty strong, right? So yeah, have these first levels as a target. Then you have all of this, these imbalances here, and ultimately here and here, right? Previous day's high. Right. And we have an optimal trade entry, long, and as usual, I just kind of eyeball everything, right? So this is with the bodies, body to body, and what's the low here? Let's just use this. It's the low here, 102,947. So literally, that's optimal trade entry, 61.8. And again, that's after this break in market structure. Here, you have a break in market structure here and here. So you could have technically got in here. I'm thinking, let's see. Yeah, it went down 50%. So you would have went in here, you would have targeted here. And you have a bearish fair value gap here, which sent it back down. So this is where you keep your wits about you, so to speak. And then you have it come back down here, sweeping this sell side, digging in deeper into, which obviously created another market structure shift. And that's where we anchor in the candle on, anchor in the fibs on this candle here. And obviously here. And your entry would be around this area here. Anywhere below the 50% would be discount. So ideally 61.8 and 70.6 between that range, but below 50% is a fine entry. Your stop loss would be below the swing low. Your first target would be here, meaning in terms of scaling out of your position. Obviously, you can use the swing highs as more reasons to scale out of positions, or you can use, I like to use standard deviations from my entry to my stop loss placement and overall range. All right, and we are also in, obviously, we're in the kill zone. And this happened just before the news hit at 8:30. On 8:15, 8:30, it went bananas, so to speak. Yeah. So anyway, that's a setup, and that's really, it's not necessarily like, oh, you can't, I'm not trading dollar, but this more than likely looking for your A+ setup in different asset classes and different charts. That just gives you more reps, so you can actually recognize your trade setup when it actually does formulate in the market that you do trade. So let's go to, I want to see what the 10-year looks like. What are you doing, buddy? Yeah. So yeah, everything was pushing, right? Okay, treat everything. Right, so obviously you have different levels here, different inefficiencies or imbalances here. You could have used here as a highlighted 4-hour volume imbalance, price traded down into. You could have used this bullish fair value gap here as a draw on liquidity. I can see this inverted fair value gap and trust it more so than I would this right now, right? Only because I can see that price respected it before, price disrespected it here, price traded back above it with some force, and now it should be more like a bullish fair value gap, right? Like a reclaimed bullish fair value gap. So that's the NQ, and you can see came down, took out, traded inside of here, internal range liquidity. What's the next draw on liquidity? Should be external range liquidity, which is generally these relative equal highs here, and who knows if it's going to come out and take this out, but took this swing high out, all of these relative equal highs here, these ones as well, and this swing high here. And it looks like right now it may be trading down to fill this gap here, the rest of this gap. So that's something to consider, what's going to happen here, or is it going to continue down lower? Only time will tell, right? So let's see if we can find a setup here in regards to, so bearish, we still inside of this range here, meaning on Thursday and technically on Friday we were still inside of this range, and you can see that same 4-hour fair value gap that's again traded through it with force, traded back down into it, into the volume imbalance ultimately, and then reclaimed that level. So that would be a prime entry. And again, all right, so this is the previous day's low, so to speak. That's eyeballing it here. Previous day's low, previous day's high. We are trading around the previous day's high. We want to look in terms of the range, available range right now. So again, you can stay here, but where would you anchor your fibs on? It doesn't have to pull back all the way back down into this range when we technically inside of this bigger range here. So let's see. All right, so based off of this, we're in a discount based off of this entire range, pulled into a premium, pulled back down below the 50% range with this wick here, into the volume imbalance, back into discount. And we can use that to start looking into obviously a entry model. I'm gonna take that off because, I mean, why not, right? Point is proven. So 15-minute, as ICT likes to say, this is his bellwether chart. And you can see now you have a entry here. Not sure what this red line is right now, but oh yes, that was like a previous swing low that we rated before. So you can see it here on the 4-hour chart. Okay, so let's look. This is the current range. Optimal trade entry long in the 70.5. And again, first target would be the 0%, or this previous day's high. Here, 50. Let's see here. And again, this is that 4-hour inverted fair value gap, or reclaimed fair value gap, however you want to call it. So yeah. What was it? Oh, okay. Let's use the bodies for a better entry model, not just to identify the range. And we have a tighter risk to reward parameters. And you can see, again, either way, you can still see the entry model in regards to fair value gaps, right? It took off. Let's see what the 5-minute looks like. All right. And you can see more entries here. So you have a break in market structure here, pull back into this, then go all the way back down into the fair value gap down here, but you have one here, which you can see price was respecting. So then you have a breaker here as well, and you have a inverted fair value gap here. So it's a lot of entries there. So pretty much consolidated after midnight. Consolidation as you pull back into this 4-hour fair value gap. And this is during the news, 8:30, and it's 10 o'clock. 10 o'clock was kind of like choppy, fake run up, fake Judas swing down, and targeting a, what was that, a 1-hour fair value gap? Yeah. 1-hour fair value gap, all the relative equal highs up here. All right, let's see. Yes. 4-hour. All right, inverted fair value gap still, same situation. Price stayed above the consequent encroachment of this inverted fair value gap. Here, traded back up, traded back down. So with some displacement, some bearishness, some momentum. Did I say bearishness? I think so. Some bullishness. You know, this, you don't necessarily need to see this big bull bar. You can kind of, you don't necessarily have to see volume to know that there's a lot of volume in this candle here, right? Because look how big it is compared to the previous ones, right? So just drop down. All right. Again, relationship of today, this day, Friday, with the previous day. And again, we consolidated all these relative equal highs and lows here. Came down, swept the lows, took out the internal range liquidity, and traded back down into the bottom of that 4-hour inverted fair value gap. And drop down 15 minutes. Same situation. Using this swing low and this swing high. Optimal trade entry. Long. So, boom. 5 minutes would be more definitive, clearer, right? Using the PM session, New York PM session low. No, it's not even PM session low, but swing low during the New York PM session. Because this is the range, right? Price consolidated here. You probably say how you determine this, and that's because this is the current range price is in, right? So yeah, this is the current range, pulled back down into premium, from premium to discount, from premium consolidated, pull down into a pullback, into a discount, optimal trade entry, long, and again targeting. Then at this point, this was the intraday high, previous day's high, and then it came back down into that level and took off again. Do believe, yeah, I think I took the short here. I took the short at 8. Market maker sell model here. Wow. Just rolled my foot over, but that's okay. How about them apples? Anyway. All right. So what did I use to determine that? Okay. All right, so 1 minute chart, and this would be your London highs. Just eyeballing it. Obviously, it's not. All right. Got the London highs here. And you can see again, this is that 4-hour, 4-hour inverted fair value gap. So we can wait for break in market structure, right? We gap here. There's no break in market structure yet, technically, right? Trade back up, trade back up. We have one here, short entry, taking out these lows. Okay, probably would have got out, or so being that it was a lot of high impact news at 8:30, right? Price doesn't really want to give you an opportunity to get into this big move. So you got consolidation, manipulation, then you got distribution. We have an entry here. Right, that's one entry just before the big rundown into this. Right, but all right, so actually this would be your run on stop. So your break in market structures here, retrace into this volume imbalance, and your drop. So this is a breaker, bearish breaker here. And yeah, so anyway, we're going to discuss breakers, but here is your volume imbalance. And that's about it. I think what happened? Let's see, the YM did. Your 5-minute chart, 1, 2, 3 pattern. Trace back down into this inverted fair value gap. There's your entry. If you didn't want to buy the low, there's your entry here. Looks like you have another. It's your break in market structure here of this, and your retracement back down into this bullish fair value gap.